Today we have with us Tim Buckley, who's a leading energy analyst based in Australia and keeps a close watch on India's energy sector. Welcome, Tim.
Thank you.
So to start off with, let's talk a little bit about the recent announcement of the government of India that it'll be opening up the coal sector for private investment, for foreign investment, and with 100% FDI in coal. So how do you think that's going to impact India's coal sector? Are there foreign companies who would be interested in investing? How do you think that's going to pan out?
I think I would start by saying India is at the moment importing 200 million plus or minus tonnes per annum of coal. So there is definitely a need to replace those imports. I do not see peak coal in India in the near term or even the medium term. I think we're close, but the Indian economy is still growing, energy demand is still growing, and 20% of India's energy from coal-fired power is coming from imports. So there is a huge appetite, I think, in the Indian government to substitute imported coal with domestic coal. So even if coal consumption peaked, there is still scope for domestic production to grow 10, 20%, 25% to crowd out imports. We saw back 2014, the High Court of India forfeited a lot of, almost all private coal interests back to the government. And initially we saw the government tenders very successful. Private industry was desperate to get some coal production for vertical integration. Subsequent tenders haven't worked anywhere near as successfully. So I think maybe the government is saying, well, if we can incentivise or allow foreign investors to come into the coal sector, that might accelerate competition and foreign investment. But ultimately, I don't think it's going to be overly successful. India is still on a path of more coal for now. A lot of the Western markets are beyond peak coal and in fact looking at the exit of coal entirely as an energy source for power. And so in that environment, you've seen companies like Rio Tinto 100% exit thermal coal and in fact all coal production over the last 5 years. You've seen BHP just last month announce that they will no longer invest in new thermal coal, and that they have actually tried to put up for sale their 2 remaining coal stocks, a mine in New South Wales, Australia, and one in Chile. So I would say foreign capital markets are moving against thermal coal in particular, and so it's going to be very difficult to find too many foreign investors looking to invest in the Indian domestic coal market.
So you're saying that given the global environment and the fight against climate change and how that is contributing to changing perceptions about coal, and also in terms of meeting Paris, the terms under the Paris Agreement, that the world is moving away from coal, but India could still grow in terms of adding capacity of coal.
Correct. And so it is very much about India's economy growing. If it grows at the target of 6, 7, 8% per annum over the next 10, 20 years, a lot of energy is going to be needed. That's a very different picture to, say, my country, where energy demand peaked a decade ago and it's been plateauing for that entire time. So a decade of no growth. Every time you bring on a renewable energy project, which is now the low-cost source of power, and it's also the cleanest source of power, you're effectively exiting coal to replace it with cheaper, lower cost, less polluting, less emissions intensive alternatives. India is very different because of the growth nature and the expanding market. So I think if you're looking at foreign investors to invest in the Indian market, it's going to be very difficult to get them to invest in something that is contrary to the Paris Agreement at a time when their investors are looking to the end of thermal coal. So it's a very different dynamic in the Western markets, whether it's Europe, America or Australia, to what is evident in Asia and in India.
And you've also followed closely how Coal India has been functioning. So what would have been the thinking behind this move? So what would have been the drawbacks of preferring Coal India to private investment and foreign investment?
My background, I was in financial markets for 20, 30 years, so I do believe markets are the best way of operating a business, but we need the government to set the framework. So we have seen Coal India in the last 5 years certainly improve its game. It's lifted its production maybe 5% per annum for the last 5 years versus maybe 1% volume growth per annum for the 5 years prior. But there is still a major 200 million gap to be filled to replace all of the imports. So I think at the end of the day, the government is focusing on the current account deficit and the risk to the currency of India by being reliant on imported coal. And Coal India has an aspirational target of 1 billion tonnes per annum, but that might take a decade to achieve, and even then probably unrealistic that that will be achieved. You've seen the Indian government try and incentivise domestic industry. We've seen Adani Enterprises, for example, they have expanded production quite aggressively. They've got 5, 6, 7 different 8 projects now under train, and they're looking at a target of 120 million tonnes a year of capacity. But even to someone as well connected as Adani, that is going to be a very ambitious task. We've seen National Thermal Power Corporation come in with a plan to develop vertical integration, so take a coal mine and use the coal in their own operations. So they achieved 7 million tonnes of production last year. Their target's for 113 million tonnes, but it's undated. It might take them 5, it might take them 10 years, it might take them forever. Coal mining is a very land-intensive activity. It is very intrusive on local communities. There is a huge community resistance to it. So whether it is Coal India, NTPC or Adani, there is going to be a massive community backlash. I think if you brought a foreign player into the Indian context, they're just not going to contemplate the land acquisition risks, the community outrage that you see. Local companies maybe are more used to it, more able to work with it. I just can't see major credible foreign corporations taking on that political risk, community risk, and as you mentioned, most importantly probably the Paris Climate Agreement risk of running a strategy diametrically opposed to Paris.
And how do you think that this is going to impact the targets that India has set, which have been quite ambitious by themselves, of renewable energy and of phasing out coal? Do you think that we are going to mine more coal given this change than we would have otherwise?
I think India is in a very difficult position. The Indian government is putting aspirational growth targets for the economy over the next 5, 10, 20 years that will require probably a doubling of the energy requirement that is currently involved. India imports more than 80% of its oil. It imports 50% of its gas. It imports 20% of its coal. So if you're going to pursue a strong economic growth model, you're almost requiring that you use a lot more energy, and that means under the current model a lot more imported fossil fuels. Now, at some point you reach a critical constraint that the currency and the current account deficit feed too much of a headwind into the domestic growth model. So that's a long way of saying that at the end of the day, the government is saying if we can do renewable energy to the maximum extent possible and then balance it with domestic coal, that provides more energy security and it provides more domestic investment, more jobs, more investment and more domestic energy security. Now, I would hope that the vast majority of the energy comes from renewable energy and that coal is used as a balancing source to enable the progressive transformation, decarbonisation of the energy system in India. But there really is renewable energy, there's domestic coal, and then there's imported fossil fuels. So the government is trying to balance that the more renewables the better, but if you have to balance it, you'd far better domestic coal than imported coal.
And the need to balance it is because we still don't have the technology to be completely reliant on renewables, and in terms of renewable supply being erratic and the lack of storage.
Correct. Renewable energy is India is one of the leading countries in the world in adopting and embracing the opportunities of domestic, clean, low-cost renewable energy. But by being a leader, it also means India is going to have to grapple with the technology change that's still being worked out as we go. This isn't a model that was around 10, 20, 30 years ago that India can just take from Europe or from America and replicate here. India actually has to replicate it and develop it in their own context. So, as you said, solar is intermittent, wind is intermittent, hydro is very seasonal. So it's a matter of actually building complementary new technologies that allow you to integrate at rapid scale huge amounts of admittedly very low cost renewables, but you have to manage the intermittency. So that means big investment in the grid, big investments in batteries, big investment in gas peakers potentially, pumped hydro storage, grid interconnection. Because if you're trying to integrate a large amount of renewables, geographic diversity actually helps in the integration. So if you can have big solar projects down in Tamil Nadu and Karnataka and they're balanced against Rajasthan and Gujarat, then you get geographic spread, you get more consistency. You then do that in onshore wind, offshore wind, hydro and solar, and that brings fuel type technology diversification, geographic diversification. Now, all of that requires a very strong, robust, modern grid. So at the same time as India is investing in renewable energy, it needs to invest in grid expansion and grid modernisation.
And given that the recent reports of the IPCC have been quite dire, saying that we only have about 12 years to move away from fossil fuels, how do you think that the world is doing in doing that, in accomplishing that, and what is the future of renewables? Does the economics now stack up?
Yeah, the 12 years is very much, I might qualify that and say the global investor groups have talked about the fact that the OECD countries have 12 years to exit coal. I think the investor group on climate change has talked about the OECD exiting coal by 2030, China exiting by 2040 or 2045, and then the rest of the world by 2050. I think it's really important that we acknowledge the common but differentiated principles of the Paris Agreement, that India, for example, didn't cause the problem. It was China, it was America, it was Australia, it was Europe who have had the privilege of using coal for decades. So I think the message for India is that we need to transition. There's an economic imperative to a transition. There is certainly an environmental imperative to transition, but it's got to be done in conjunction with strong economic growth so that the Indian economy and the Indian people aren't suffering from solving the problem that the West created.
So, and another related question to this has also been the financial contribution that the developed countries have to pay developing countries for both mitigation and adaptation. How do you think that is going? Because India has often raised this issue that the developed countries have not been doing enough.
I agree entirely with the Indian government stance on that. I think the Western countries have been abrogating their responsibility. They have committed to $100 billion a year of financing every year, and we're not seeing anything near that. And if anything, under President Trump, we've seen America actually walk away from the Paris Agreement. They certainly haven't been able to walk away formally, legally from the Paris Agreement, but they immediately walked away from their funding commitment. So to me, that's the disappointing thing, that this technology is readily deployable, it is commercially viable, it is entirely sustainable, it builds energy security. There's nothing wrong with it, you just need more capital. And at the end of the day, if the West was providing that capital, India and similar countries could transform and effectively leapfrog a couple of technologies, deliver a more cost competitive, a cleaner, more sustainable energy system. And unfortunately, the short-sighted nature of global politics and maybe the intransigence of the fossil fuel lobby groups globally is yet to be overcome. But I am very optimistic, because ultimately we only have to open any Indian press any week and we know that renewables are now by far the lowest cost source of supply. they're also critically a domestic source of supply. So if you think about what motivates any government in the world, it's energy security. And wind, solar, hydro are all domestic sources. So at the end of the day, they are diversifications and they're energy security positive for India, and better still, they're lower cost. And they're consistent with the Paris Agreement. So I think India is moving in that direction anyway. It could happen a lot faster if the West helped fund.
So in light of this, it's already, renewables are already cheaper than coal. If we solve the technology issue, then this move for 100% FDI in coal would hold even less water.
Correct. At the end of the day, it's about the Indian government trying to incentivize or allow foreign investors to do what domestic investors in India have failed to do. Now, the idea that a foreign company is going to succeed where an Indian company has failed, to me, it doesn't hold a lot of water. So at the end of the day, India is probably not going to see much success in this initiative. At the end of the day, though, maybe I'd contrast that with renewable energy. We just recently put out a report highlighting how much foreign capital is ready, willing and enthusiastically embracing Prime Minister Modi's 523 gigawatts by 2030 target for renewable energy. It's a massive aspirational target. It's entirely doable, it's commercially sensible, and both domestic majors and international majors are willing to invest. So already you're seeing that massive foreign direct investment in the renewable sector, and I think that's aligned with Paris. It's 100% aligned with Paris. So it's aligned for India's purposes, but it's also aligned for global capital financial institutions. So I would expect that to accelerate and coal to play a very marginal role in FDI into India.
And moving on to the Adani coal mine in Australia, which has attracted a lot of attention in Australia, has attracted a lot of protests. It's become a big political tussle as well. Finally, now after 9 years, the Adani Carmichael mine has all the permissions in place, but work has still not started, mining has still not started. So what are the roadblocks that remain for that mine?
If you go back to 2010, when the Adani group first bought the Carmichael deposit, they bought a very remote, very isolated, major scale deposit, but it is in the middle of nowhere. It's 400 kilometres from the port. There is no roads, there's no railways, there's no water, there's no electricity. It was a very, very ambitious project at the time. Now, fast forward to 2019, as we've just talked about, world global investors are not looking to invest in thermal coal. So they accept that India is going to be using coal for several decades to come, but the world is talking about the West moving 100% away from thermal coal within 12 years, 11 years now. The idea of opening up a mega mine 11 years before we cease use of the product just makes no commercial sense. It doesn't make financial sense, and it's 100% non-aligned with Paris. So to expect global financial institutions to fund that project is unrealistic, and that is what we've seen over the last 5 years. Every global financial institution who's evaluated the project has said it's not aligned with their strategic direction, their Paris Agreement commitments, and therefore they don't want to fund it.
In a recent report, you have also said that this project would not have been possible without government support in Australia, without some sort of a financial support as well. So explain that a little bit. What are the subsidies that the project has got in Australia, without which it would not have been sustainable?
The Australian CEO of Adani has said that this project will stand on its own 2 feet with no government subsidies. Now, the statement is just, in my view, blatantly wrong. The project is able to access certain special purpose subsidies and also some general subsidies that everyone else in the coal industry get, but they are subsidies regardless of whether other coal miners get them or not. So the response from the company to our report was, oh, but other people can get it, why shouldn't we? Now, my view is Australia has committed under the Paris Agreement not to subsidise fossil fuels, and yet here we are providing massive multi-billion-dollar subsidies for existing and potential new projects. So to me, there's a lot of hypocrisy in the Australian government, and that comes from the fact that Australia is one of the biggest exporters of fossil fuels in the world. So the incumbent industry is very powerful, and like any incumbent industry, they have their hands in the taxpayer's pocket. So the Carmichael project is due to receive a massive multi-$100 million diesel fuel rebate. Now, I don't get a diesel fuel rebate, but coal miners do. So 25 million Australians don't get the diesel fuel rebate. We all pay 40 cents, 40% of our purchases of fuel, we pay a 40% tax. But the coal industry doesn't pay any tax. So under the OECD, that is the definition of a subsidy. There's a special purpose exemption for the coal industry. Now, the agricultural industry in Australia gets the same exemption. It's still a subsidy. We subsidise our farmers, but we're also subsidising coal. We also allow coal miners to leave all the mess at the end of the mine, so it's called mine rehabilitation. They do progressive rehabilitation, but Adani, like every other coal miner, has been given the right to leave 6 massive final voids. Now, the German government has put aside more than 200 million euros a year in perpetuity to detoxify, to reduce the toxic nature of the water build-up in those final voids in Germany. We have no such plan in Australia. So the Australian taxpayer is going to be left with all these final voids. Adani is proposing 6 huge, huge final voids that will be left as a toxic water catchment area in perpetuity. Now, there is no requirement for Adani to clean that up. Now, quite rightly, every other coal miner is allowed to do it. Why not Adani? The Queensland government said from now on no new coal mine can leave a final void. But they gave an exemption to Adani. So there are other exemptions. So there is a royalty holiday. So for 7 years, the first 7 years of the project's life, the Carmichael coal mine doesn't have to pay royalties. Now, they'll pay it back with a little bit of interest in a decade's time, but that means for the next decade, the Queensland taxpayer gets no royalties. So they get left with all the rehabilitation costs of the final voids. They get no royalties for the first decade, for the next decade, I should say. It's a 7-year royalty holiday, but it'll take you 3 years to build it. The corporate structure is almost 100% debt finance, so it's highly unlikely that Carmichael will ever pay corporate tax in Australia. Now, anyone operating in Australia who's domestic would be paying tax. It's highly unlikely that the Carmichael project will ever pay tax. So they get free access to groundwater for the life of the project. Now, Australia is a very, very dry continent. Water scarcity is as much a problem in Australia as it is in India, and yet the Carmichael mine has free access to groundwater for the entire life of the mine. That is a major subsidy by the people of Australia, or the environment of Australia, to this mine. So lots of free groundwater, the right to leave massive final voids, 7-year royalty holiday, minimal, if any, corporate tax over the life of the project, diesel fuel rebates. There's a huge number of subsidies for this project. So at the end of the day, the Paris Agreement says we should not be providing subsidies for fossil fuel companies. Australia is a signatory to the Paris Agreement, as is India, and yet Australia is providing whole new subsidies to build a mega mine the world can't afford to use. And that is why there's so much community anxiety and pressure and backlash against this project. The reality is it's a pressure against building any new thermal coal project in Australia. They are totally inconsistent with the Paris Agreement.
And in your view, given the number of subsidies that the mine is getting, and that it already has all the permissions that it needs, does it make financial sense for the mine? Does it make financial sense to import the coal into India, then generate electricity here? Or would it make more sense to buy the coal here and then generate electricity?
In an ideal world, India should be investing in renewable energy with balancing. Now, coal is not a good balancing source, but it is what it is at the moment in India. So ideally, India should be investing in renewable energy, and Australia should be helping India invest in renewable energy, but it's not an ideal world. India has built probably 10 coastal coal-fired power plants. Those coastal coal-fired power plants use 50 to 100 million tonnes of coal a year. they're 1,500 kilometres from the nearest coal mine. So for the life of those power plants, they will be importing coal. It's not really cost effective. Like you go to Mundra, the Mundra power plant that Adani owns, the Tata Mundra power plant that Tata owns, the ESA power plant. They are so far from a coal mine, there is probably no alternative but to use imported coal. So then the question is, should you write those facilities off as stranded, or should you make good of a bad situation? Now, the trouble is, they're not viable on the tariffs that were agreed by the proponents 10 years ago. So unfortunately, we now have a situation where the Gujarat government is getting Gujarat ratepayers to subsidise those 3 coal-fired power plants for the next 30 years to use expensive imported coal to run stranded assets. So unfortunately, what Adani is looking at is the idea of taking expensive coal from Australia, using taxpayer subsidies to get it out of the ground and get it onto a ship, and then they're using that power in Gujarat, in the Mundra power plants, or potentially the Godda power plant up in Jharkhand, to supply expensive power to Bangladesh. So either way, there are subsidies all around that drive these projects. So it's not an economic project, but with enough subsidies, anything is economically viable.
And finally, what do you think the global outlook is on coal? Given the kind of climate movements that we've seen and the popular opposition to coal now, and it's gaining strength every year. So what do you see the outlook being for coal? What is the future of coal globally?
I see coal in terminal decline, and I'll clarify that. It does affect all coal, but thermal coal for power generation, the world can't afford to burn it. It's totally inconsistent with the Paris Agreement. It's no longer the cheap source of energy. Most countries like India, like Australia, have massive water security problems that are only getting worse. We have major air pollution pressures. We have the Paris Agreement. So whether it's on air pollution, water pollution, carbon emissions, it's expensive, it's dirty, it damages the earth irreparably with all of the rehabilitation mess that's left. There are a multitude of reasons why the world has to exit coal. There are far better, technologically viable alternatives available today. Now, coal has a future in India for longer than, say, in Australia or in America, but it's all going the same direction. And ultimately, the International Energy Agency actually forecasted if the Paris Agreement's to be delivered on, coal use globally must cease by 2050. Now, you could possibly have a couple of % of the world's energy coming from coal, and that would be in places like India or Bangladesh or Vietnam, or where brand new plants have only been commissioned today and they've got a 40-year life, so maybe they run for 20 or 30 years before they're recognised as stranded assets and the world does away. But if we're to deliver on the Paris Agreement, coal use globally must cease by 2050. That's a pretty clear deadline, and that means if you're building a new power plant today, the chance of you operating over the 40-year life of that project is close to zero if we're to have a livable planet. So I would say banks ultimately will stop lending to coal. They'll stop lending in the West first, and we're really seeing that momentum building. We've seen 108 globally significant financial institutions in banks and insurers introduce formal policies saying they won't lend to new coal-fired power plants or thermal coal mines. I see that building very, very rapidly. And ultimately that means the financial markets more than government policy will actually determine the end of coal.
Thanks a lot, Tim, for joining us.
Thank you.
To receive instant updates on all videos from The Wire, click the subscribe button and hit the bell icon. Pay to support independent journalism. Click the link in the description and choose the amount you want to pay.